I'm Dan Fitzpatrick at realmoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Let's look at Johnson & Johnson, Netflix, and Continental Resources. Last night on Mad Money, Kramer was talking about Johnson & Johnson. He says Big Pharma is back. So he likes J&J. Let's look at the weekly chart. First of all, it's got a 3.5% dividend yield, which isn't bad. It ain't great. It's not as good as some telecom companies, but then you can't get drugs from telecom companies, can you? So look, 200-day or 40-week moving average is trending higher. You're not going to get rich on this stock, but not every stock in your portfolio is going to be doing that anyway. You want some stability here. And you look, this has basically been Johnson & Johnson over the past couple of years. Yeah, it traded down really low here, but that's what the market's done. Since this time, though, since it fell down several months ago, stock's been trading sideways. We look at the daily chart. You can really see it. I mean, the stock looks kind of like a sloppy mess, but if you really look at the lines here, 61 on the downside, about 66 on the upside. That's less than a 10% swing from top to bottom. Usually stocks are in about that 10% category. So Johnson & Johnson is actually pretty stable. What I think you want to do is try to buy it as close to the 50-day moving average as you can. That's what's supporting the stock right now, which, by the way, is also about where the 200-day moving average is. That's where you want to buy this stock. Frankly, because this thing's been so stable, I'm not even sure I'd put a stop in, and I know that's blasphemy to some folks, but if the stock falls a little lower, then just take an increase in your allocation and buy a little more. Whitney Tilson was on Fast Money last night talking about Netflix. If you watch Fast Money, you know that just a couple weeks ago he was on basically banging the table on Netflix, which is really easy for him to do since he already owns a slug of it. But before you say, well, that guy was talking his book, look what happened to the stock. Popped out of a volatility squeeze, which you could, by the way, see coming, so that shouldn't be a surprise. But since that time, the stock's had a nice little run. They announced earnings, and where was the stock after hours? It was up like at $1.10, something like that. So because it's still okay to buy Netflix? Depends on what your holding period is. If you measure your holding period in terms of hours, minutes, stuff like that, probably not. You may get a little bit of a pullback on the gap this morning. But longer term, guys, look at this chart. Look how far down this stock has come. If these guys are really gaining subscribers, if they're actually going to have a going concern, then stock's probably going to go a lot higher. So this wouldn't be a bad time to be buying Netflix. Kramer was also talking to Harold Hamm, the CEO of Continental Resources. These guys are the #1 producer in the Bakken Shale. That's where all the jobs are. You know, if you want to go up there and get a job and get out of the tent on Wall Street, why don't you go to North Dakota? Look, this is on a really nice tear here. I mean, this stock has been big time rallying since October, but look what's happened here. It's broken out above this level. We'll zoom in here now that you can see what I'm looking at. There's resistance. It broke out above that level, has tested it, and now it's off on the run again. Is this the time you want to buy it? First of all, if you own it, probably consider even selling a little bit. Just take some off the table, and that leads us to, is this the time to buy? I wouldn't really be eager to buy a stock that's jumped like 12%. What I'd want to do is wait, let the stock pull back a bit. You could probably get it closer to 80. However, if you really want to own the stock, then just take the plunge and buy a little bit anyway. Just take a little bit now, but keep some cash in reserve for this position. You want to be in a position to where if the stock does pull back, you're not white-knuckling it, waiting for the stock to rally so you can make your money back. Instead, you're pouncing on the opportunity to buy a good stock at a lower price. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles, Fitzbits. 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. you've got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you one video a day with a charting idea that's designed to do two things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.